investors have a hard time with two things. One, recession has to be bad for airlines. They just don't realize we're coming from such a depressed level. And then the second one is capacity. And investors are worried about total industry capacity and probably will today with United's order. But the reality is that the constraints on pilots, on aircraft manufacturers, and air traffic control saturation means supply is going to be constrained. It is going to be challenged.
Well, my next guest is still bullish, and Delta and United are two of her top picks for 2023. Joining me now is Helane Becker, senior research analyst at Cowen. Welcome, Helane. And CNBC contributor Jeff Kilburg is here with me as well. It's great to have you, Jeff.
Thanks, Kelly.
And he is bullish on Boeing. We'll get into all of that in a second. Helane, let's start with you. What are investors afraid of here? Recession?
Yes, in a word. I think Scott summed it up. Recession and too much capacity. And our view is that the airlines are already in a recession. They had about the worst thing that could ever happen to them occur, which is we were back to 1950s traffic levels. Traffic in April of 2020 was down 96%, and we've come back very strongly. One of the things that we point out, and we wrote a long report today in which we discuss it, is that we're within 5 percentage points of 2019 traffic levels, and that is with business travel being down 20% year over 3 and international being down about 25% still. So in our view, we've come so far, and yet the stocks are back to where they were in 2020. To us, it seems like they're already anticipating a recession.
Sure.
And it's counterintuitive because normally airlines lag, and in this case, they've led.
Jeff Kilburg, what do you make? I mean, first of all, would you kind of be eager to pick up the airline stocks here? Do you share some of the market's hesitation?
There is a dislocation, Kelly, and absolutely, when you see that dislocation, you want to be a little adverse. But Boeing is a name, if you look technically, it's above its 50-day, it's above its 200-day. And if you actually look to own it, or if you're adverse to own it, look at the option market. If you sell it at the money put at 182, you're going to collect $10 just going out to the end of January. So there is a risk to the upside. I have a price target on Boeing at 210. But to walk away just for a second, I think I'd rather own Lockheed Martin. Look on a year-to-date perspective. Lockheed Martin, which of course is all focused on defense, where you could argue Boeing's only 50%. It's about a 45% dispersion. So we are over-allocated to Lockheed Martin. I think that theme persists in 2023. But Boeing, we do like it here.
I mean, defense stocks have definitely been a bright spot this year, no question. If anything, you're reminding us that Boeing's defense exposure may be one of the things that's helping it right now in what's otherwise been a tough tape. Helene, some of the, normally you'd think, okay, if we're going into recession, that would favor, for instance, the discount carriers. Maybe consumers are a little bit more price sensitive, maybe even businesses. But right now, that's where we have the biggest questions about, kind of nuts and bolts operations. Look at JetBlue, even Spirit. So what would you do? We know you like the top tier. I think, Jeff, you would be top tier as well. But what do you do with the rest of the field?
Yeah, we downgraded we downgraded JetBlue and Allegiant, and we don't have a buy on Spirit. And our view there is that on the cost side of the equation, on a revenue or rather cost percent change basis, their costs are going up much faster than those of United and Delta and American. And you pointed out that those are our two top picks. And that's how we're thinking about it. We think the revenue growth is going to offset the cost pressure that those airlines are going to be affected with. But from the consumer perspective, we're seeing a shift in mix in the way, and we're seeing a change in the way people are traveling. So
what kind of change?
I'm sorry?
What kind of change?
In terms of mix shift and the way they're traveling, we're seeing people not necessarily live where they work anymore, but they still have to come back in the office. So there's this hybrid environment where they're back and forth. So they're traveling more than maybe they have in the past. And then in terms of mix shift, we think that as more international markets, especially in Asia Pacific, open, we are going to see an increase in demand for those markets as we did in Europe this year and in the US earlier this year and last year.